Good morning and welcome to the ADS Securities Markets Update. We'll start today with a look at the US figures again, which were released yesterday with another disappointment outcomes. First of all, the NFIB Small Businesses Index increased way less than expected, rising toward 98, up from 97.9, while the estimates were to rise significantly above 99.2. Moreover, the wholesale inventories increased more than expected, rising by 0.3% in January, comparing to no growth in December of last year. And this is despite that the wholesales also trade, or the wholesale trade sales is entering a recessionary period, declining by 3.1% in January, comparing to another decline of minus 0.9% in December of last year, and this is after revising it down from minus 0.4%. And this is also despite the fact that the estimates were only to decline by 0.5%. And with this outcome, the wholesale trade sales also posted the fourth monthly decline in a row, not seen since the financial crisis in 2009, and also this is the biggest monthly decline since March of 2009. Finally, the jobs opening in the US also increased toward 5 million, up from 4.88 million, which was also revised down from 5.02 million for the month of January. The US dollar kept on rising across the board yesterday, and it seems that such an event is worrying the government. Finally, yesterday the White House economic advisors noted that the stronger dollar is a headwind for the US growth. However, the US dollar gained eased for a few minutes before it kept on rising again, sending the euro dollar below 1.0670s. As for the Asian session today, there were also a collection of economic releases from Japan, Australia and China, which came in also with another disappointment. Beginning with Australia, the West Pac Consumer Confidence Index fell down by 1.2% in March, after rising by 8% in February, and this is the first monthly decline in almost 2 months. Also, the home loans, or in Australia, the home loans also tumbled by more than 3.5% in January, after rising by 2.7% in December of last year, while the estimates again were to decline by only 1.9%, and this is the biggest monthly decline since February of 2012. In Japan, the core machinery orders also fell by 1.7% in January, after rising by 8.3% in December of last year. However, this is less than the market estimates, which basically were to decline by 3.9%, yet it is still the first and the biggest monthly decline since almost 3 months, or since almost October of last year. In China, the entire data sets also came in with another disappointment, and unfortunately, first of all, the industrial production also slowed down to 6.8% in February, down from 7.9%, while the estimates were to decline or to slow down only towards 7.7%, and this is the lowest reading since May of 2009. The retail sales also slowed down further toward 10.7%, or significantly toward 10.7% in February, down from 11.9%, while the estimates again were to decline slightly or to slow down toward 11.6% only, and this is the lowest reading since March of 2004. Finally, the fixed asset investment also slowed down again toward 13.9%, down from 15.7%, while it had been anticipated to decline toward 15.1%, and this is the lowest reading since February of 2002. Going forward to the European session ahead, there are only two economic figures from the UK, including the manufacturing and the industrial production, and the estimates for both are to rise by 0.2% in January, while the manufacturing production increased in the UK by 0.1% in December of last year, and the industrial production fell back then by 0.2% during the same period. As for the US session today, no economic figures will be released, but all eyes will be on the weekly crude oil inventories again, which is expected to rise by 4.5 million last week, comparing to 10.3 million the week before. Speaking about oil, yesterday we noted that we noted that crude oil is entering a new selling area, which basically was around 50.59. And then also the 65 and 51.06. However, the pair basically started to rise toward 50.65, and then we entered the first short position also, and then the pair continued, or the crude oil, the West Texas crude, fell back down toward, or well below, the level that we noted, which basically was 48.88. This was the dip below. But however, right now we're still looking for more declines in the next few days, in the next few hours, and basically This trade was all about the 50% retracement Fibonacci from the latest decline, which basically was between 5th and the 6th of March of last week. Therefore, right now we booked already more than $1.5 or $1.5 in this trade, and so far the stops can be moved down to break even or to break even a point, and thus this is also, it's a risk-free trade, and now you can decide when or where you want to book your profit. Finally, about the euro, the pair fell below the key support area, which basically we noted in the previous reports at 1.0785. And reaching as low as 1.066 this morning. However, the weekly close remains the key for now, as a weekly close below the level of 1.0745 or 65 might clear the way for further decline or a deeper decline toward 1.02 area, which is basically near the parity with the US dollar. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. Thank you for watching, and have a good day, and I'll see you once again tomorrow.